In this video, I'm going to be showing you how you can predict the next candle move. Why this video is very important is that you need to know how to predict the next market move, where the market is. You need to know where the market is going to, so that at any point in time you come into the market, you can always trade the market and be on the right side of it. And once you're on the right side of the market, definitely you will be profitable. So if you want to know how to predict the next candle move, how you can trade your setup, then you need to watch this video to the end. So you need to watch the video to the end. So in this video, I'm going to be showing you the power of three. I'm going to be showing you the power of three. So the power of three, which we know as the accumulation, manipulation, and distribution, is a candlestick pattern, right? It's a candlestick pattern or a candlestick formation whereby every candle is a range and it has its own power of three. Power of three on the lower time frame, in the sense that if you look at the candlestick, the particular time frame you are looking at it has its own power of three. The 1 hour has its own power of three. The 4 hours has its own power of three. The daily time frame has its own power of three. The daily candle has its own power of three. The weekly candle has its own power of three. Even monthly candle has its own power of three. So once you understand the power of three, the accumulation, manipulation of a particular candle, obviously you can predict what the next move. So this candle, you understand what the power of three. If you zoom in on a lower time frame, you will see that a range forms between the highs and the low on a lower time frame. So once you are getting it wrong, is that once you are looking at a candlestick pattern, right? Let's assume this is a daily candle. Now, once you mark the high and the low of this daily candle, by the time we go down to a lower time frame like the 1 hour time frame, 15-minute time frame, obviously this is what we'll be seeing. We will see that once the market open, we'll have an accumulation, which is always our consolidation. Then we'll have a manipulation down to a manipulation. Now, if you are going to be if this is a bullish candle, obviously this is a bullish candle. So we have a manipulation down to the side of the opening price. If we want to be profitable, then you must pick your entry after the manipulation is being done. Right. So after the manipulation, then we'll have the distribution, which give you the body of the candle. And one thing you should know is that for the accumulation, your accumulation will always be below your manipulation will always be below the accumulation range, below the opening range of the candle, depending on the candle that it is. So that's one thing you should know about the accumulation, the manipulation. Now the accumulation, your manipulation will always be your wick. I'm giving you a pro tip here now. Now at any point in time, the candle you want to trade, the wick of that candle is your manipulation. So that is what you use to get the manipulation, and then so that's how you get it. So if you zoom on the lower time frame, you will be able to see the structure, you see the manipulation clearly, you see the accumulation clearly, and you see the manipulation clearly, and you see the distribution clearly too. Then the range of the candle. The range of the candle consists of three continuous It consists of three continuous phases: the accumulation, manipulation, and the distribution, which I've just explained. Right, which I've just explained. Right. So now this is the psychology of the power of three. So for the power of three, it can be a bullish candle and it can be a bearish candle. They are different. For a bullish candle, the power of three will be you have the open, it's going to open below. Then you have the manipulation. See what I'm telling you? This is the manipulation phase of it. Your wick will always be your manipulation. That is a pro tip. That's a pro tip. So your manipulation will always be below the opening price. And once the manipulation is done, you can start putting yourself on the trade and see and take your entry from there, and then you can take the distribution side of it. So for the bearish candle, the market will open, the candle will open up, and then you have the manipulation to the upside, and you have the distribution to the downside. Right. So that's the manipulation for you. That's the manipulation. So that's the power of three. That's the psychology of the power of three. So for you to see it clearly, to see this pattern clearly, you need to go to the lower time frame. You will see the consolidation and you see the manipulation. right? You see it clearly on a lower time frame. So that's the what? That's the power of 3. Now we have the what? The candle range pattern. The candle range theory pattern is just a what? This is a pro tip. Now for you to get the what? The power of 3, if you look at this pattern, it's a very profitable pattern. Some will call it three bar candlestick, some will call it swing high. All these things, they are just the same thing. Now you need to understand the psychology behind this candlestick pattern. Right? You need to understand the psychology. So it's a 3 bar candlestick, right? Where you have the what? The first candle. The first candle will always be the one to set your range. Is going to be the one to set your range. So once the first candle set your range, right? So once the first candle set your range, you have this. So the first candle set up the range candle. This is the first candle now. This is going to be the what? The range of the what? The move that you have. The second candle takes out the what? The liquidity of the first candle. This is, if you understand the psychology of this candlestick pattern, then you can trade it. So the first candle now, this is a bullish candle. Obviously, we are for this kind of pattern now, this is the swing high. We are looking forward for a sell. So the first candle you will see will be always be what? A bullish candle. It's open below here, right? It open below here. Then you have your what? Manipulation here. You have your distribution. And the next candle now, which open, it open and then it took out the what? The liquidity that you have above this one, the high of the first candle, which sets our what? Our range. So once you have this candle and then the second candle now close back inside the what? Inside the range of the first candle which set our what? Our range. You need to understand that word close back inside. It has to close. Like this is the opening of this candle. It manipulates to the upside and then this is the close. It has to close inside the range of this what? This first candle is very, very important for this pattern to be effective. And then you have the what? The third candle. The third candle now breaks out the range in the opposite direction. You can see that okay, now the first candle set up the range. The second candle takes out the liquidity. Right? Takes out the liquidity of the buy that we have in this first candle, and then this third candle will set up the range. Now, there is this common saying that if market maker want to buy, they need to what? They need to, if market maker want to sell, they need to buy first, and then from the buy they sell. This is what we are saying when we say if for market maker to buy, they need to sell first. So this is the psychology, and then for the bearish side, for the bullish side now, it's just the reverse is the case. Reverse is the case. So you have the what? The bearish candle that will set up the range. The second candle will take out the what? The liquidity here. Brown. Break out the liquidity and you can see that it has to close inside the range of this first candle. Is very, very important. The third candle is what you want to be what? You want to be trading. Right? Is what you want to be trading. So it's what you want to be trading. So we have the what? So this is it. So the candle range theory is of 2 types or 3 types. We have 3 types of it. So we have the standard 3 candlestick. So this is the standard 3 bar candlestick pattern, right? This is the standard CRT candle. And then we have the what? The second one now, which is the what? Which is an inside bar CRT pattern or candlestick. Right. So the difference there is just that it has like 4 candles or so. Now you have the first candle that will set up the move, right? It's going to set up the move, and then you have another what? An inside bar candle that will close inside the range, but it's not taking out the what? The liquidity. So it's going to be the third candle or the fourth candle. It can be any number of candles that will take out the what? The liquidity of this. So once this is done and then it closes back inside the range of this candle, then you can trade the what? The next candle. You can trade the next what? The distribution. You can trade the what? The distribution. So in just a common sense, this is what we are saying. This first candle is your what? Is your accumulation, and then the second candle is your manipulation, and the third candle is your what? Your distribution. That's what we are saying in a simple layman term, right? That's what we are saying in a simple layman term. So the inside bar pattern. So the first candle set up the range, just like the first candle, the first CRT pattern that we have. And then the second candle is an inside bar candle. The third candle is sweeping the what? The candle which take out the liquidity by a wick. A turtle soup that we can also call it what? The turtle soup. The manipulation we can also call it a turtle soup. Right? We can call it turtle soup. Then the fourth candle breaks out of the range of the opposite in opposite direction of the what? The manipulation that we have. So that's your second, that's your what. So you need to understand this thing. It's just what this kind of trading system is just a trading system that uses liquidity. For you to be profitable in the market, you need to what? You need to understand liquidity. And one of the best way you can understand liquidity is using this CRT candlestick pattern. Right. So we have the third what candlestick CRT pattern. So this one is a multiple but it's a multiple CRT spanner in the sense that what the difference is just that it have a lot of candles. So the first candle will set up the what? The range of the move, and then you have several candles that will just be closing inside. But what the liquidity is set up here now. They are just trying to grab liquidity with all these things. They've not gotten enough metal. You can see that this candle is very, very large. The volume in this candle is large. So you can't expect the market to cover it all within 3 moves, within 3 candles. It's not possible. That's just one thing you should understand. When you're looking at those things, you need to look at the volume. The volume is very, very high. This is the volume, which is the what we call the what the body of the candle. So you need to look at the what the body of the candle, which is the volume. So once you have a very large candle, okay, you should expect some kind of consolidation that will be what that will be there. So this is the CRT high and this is the CRT low. So you just need to pay attention to the volume of the candle that you are having information. So let me give you a pro tip now. A pro tip that I'm going to give you now is that now you need to so the pro tip is that you should always trade away from liquidity soup, right? Always trade away from the liquidity. So this is the liquidity soup. Liquidity says that it's a pin back candle. Let's just call it a pin back candle. It doesn't close back. They just grab the liquidity that we have below here. They grab the liquidity that we have below here and then they took it out. So this is your what? So this is your liquidity graph. So always trade away from it. So in the sense, that's why I just told you that if market maker wants to buy, they need to sell first. The process of them selling first is what? Is to grab liquidity. So once they grab liquidity and then they trap a lot of people here, you can see the candle is very voluminous. The body of this candle is what? Is large. So once they trap liquidity and see that okay, we've trapped a lot of people in this move, then they reverse the market back. So once this candle closes back inside this range, it's telling you that what? There's a reversal, right? So that's the first pro tip. Always trade away from the what? From the liquidity soup, and then we have the what? The second one is that best place to enter a trade is based on what? On CRT at a manipulation phase or the second CRT candle just at the wick. This is what I'm telling you now. Now this is the second CRT candle. So the best place you can enter your trade is that once this what? This second candle now closes back inside, you just wait for a little retracement back into the range of this candle and then you enter your entry here. I'm going to be showing you the entry techniques that you use with this strategy tools. It's a very profitable strategy. If you have seen me flip account times without number, this has always been what I've always been doing, right? So that's your pro tips. So the entry text is now. So we'll go to our entry text is now. So the entry text for this strategy is just simple. If the high of the candle range is swept, right? This is the candle range here. So once this high is swept, right? Go to a lower time frame and look for a shift in what? In market structure or your change of character, and then you enter a sell trade and they return to the available PD array. Your PD array can be your order block or your fair value gap. You are very conversant with my channel. You always see that I always keep telling you that my entries are always on what? On order block or fair value gap. That is just simple truth. So that is what I'm looking at. This is the pattern that I trade, and you see most of the time I flip my account. It's a very profitable strategy. Just take your time and understand it. So that's the entry techniques that we have. So that is for what? That is for a bearish scenario, and this is for what? For a bullish scenario. So the bullish scenario is just the reverse is the case. So once they took out the what? The low of the what? The candle range, and then once they took this out, it is from this candle you start going back to from your second candle that you go back to your what? To your lower time frame and look for your market structure shift or change of character. And then you now wait for what? After the market structure shift, you wait for what? For a return to the next PD array that is available, and then you take the what? At other block. So that is the entry techniques you use for So the take profit and the stop loss. Of course, a good profitable strategy must have all these things. You can see the way I started from the beginning. Your take profit, your first take profit should be the 50% of the range of the what of the candle range, which is this. So it should be the 50% of this. That's your first take profit. Your final take profit should be the high. In this time now, it's going to be the high of this what, because this is a bullish scenario. So it's going to be the high of this candle here, the high of this candle here. So that's going to be your what? Your second take profit. Then your stop loss should be few pips away from your supply zone, from your entry zone. So your supply zone now, this is going to obviously you have a what? A fair value gap here or another block. So your stop loss should be some pips below it, because you know that they've taken the liquidity, they can't come back low, and then you can actually put your stop loss below the what? The CRT, below the low of the range. That one is more safer. But if the risk, and you can use the risk to reward ratio of 1:2, 1 ratio what? Ratio 2. The choice is yours. But this is the standard what? The standard take profit, your entry techniques and your what? Your money management techniques. You can use whichever one that is convenient for you based on your what? On your time frame. So now the time frame that I will work with now is this. So the setup time frame and the entry time frame. If you are using the monthly time frame, then you need to your entry is going to be on daily time frame. And by using daily time frame, your entry is going to be the what? The 4 hours time frame. And your 4 hours time frame, as in your 4 hours time frame to frame your setup, then your entry will be your what? Your lower time frame will be your 1 hour. And for 1 hour, your lower time frame will be your 15 minutes or 5 minutes sef. You can use the 5 minute too. And then if you are using 15 minutes, then you can use the what? The 1 minute time frame or your 3 minutes time frame. So this is the what? The entry, the time frame for this strategy. So that is time frame for this strategy. The one thing you need to understand is that you need to put in place your what? Your time frames. It's very, very important. It's very, very important. So now we are getting to the gym of this. We are getting to the gym of this whole thing now. Right. So now, if you are looking for the CRT candlestick pattern, right? Your candle theory, for this strategy to be effective, you can see for those who are on my what? On my channel, you've always been saying that I've always been saying that what? Time and price. This is what I mean. This is what I mean with time and price. This is what I mean with time and price. So if you want the strategy to be very effective, these are the time that I look out for trade. Time to look out for my setup. I start looking out for my setup by 6 a.m. to 9 a.m. London time. Now 6 a.m. to 9 a.m. that is my own time. My own time here is in Nigerian, so it's GMT +1. But for the London, it's going to be 2 a.m. to what? To 5 a.m. That is the time I start looking for my what? For my setup. And my trade entry period is going to be between 10 a.m. to 2 p.m. London time. And usually I stop trading by 2 p.m. to 4 p.m. London time. So that's my trading session for you. So that's my trading session for you. And then, so one of the trading, so let's go down to what? To chart example. So that I will show you the what? I will show you the chart example, how you can use these things. Right. So let's go down to my let's go down to my trade. So this is volatility 25. This is volatility 25. I have my volatility 25. So I already had my indicator that I use for it, but let me just show you the what? A candle theory now. So this is it. So this is, let's look at down here. So this is 5 a.m. 5 a.m. is going to be 6 a.m. So this is what I'm saying. So this is 1 hour what? So this is 4 hours power of 3 that I actually want to do. So you can see this is the what? This is the this is the accumulation. It's actually a what? A bearish candle. This is the accumulation. You can see the accumulation here. So you can see the accumulation here. Which days? Never. No, don't let me use. Okay. So you can see the accumulation here. It opens here, right? Then a little bit of accumulation, and then we'll manipulate to the upside, and you have what? The distribution like this. Now, if I should go down, this is 4 hours power of what? 3. My 4 hours PO3. So now this 4 hours PO power of 3 now, right, or 4 hours CRT now. In the 4 hours candle, you can see that we'll have 4 different 1 hour candles, right? 4 different 1 hour candles. So to get it right, you just go down to your lower time frame. So you go down to your what? To your lower time frame, right? So let me mark this out. Let me put an horizontal line here to demarcate where I'm going through. So what you'll be seeing, what you'll be seeing on 4 hours time, on 1 hour time frame now, this is what you will be seeing. You'll be seeing your CRT candle, right? You will see your CRT candle, you have your open and then you have the what? This is going to be the what? The second candle. You can even confirm that from without going down. This is 6:30, right? This is what? This is 5 o'clock. That's 1 hour. Then you have what? Look down, you see that we have 6:15. That's the second 1 hour. Look at what happened there. They took out the what? The liquidity here. Let's just go down to 1 hour for you to see. Okay, here we go on what? On 1 hour time frame. Now, here we go on 1 hour time frame. So you can be able to see, you can see the CRT, see how the CRT pattern. Look at this is the first candle. It opened, manipulate to the upside, and then you have this what? This candle to close below, right? To close below here. So this is your what? This is your first candle, this is your second candle, and this is your what? Your third candle. So you can use it first. So this is my London, my CRT with London, right? That's my CRT with London. So remember that I'm using the what? The 1 hour time frame. So I can go down to my what? To my 5-minute time frame, and then from 5-minute time frame you can see the manipulation clearly and you can place your what? Your entry. Right, so let's go to 5-minute time frame. So that's the CRT pattern. It's very what? Very profitable. Just do sure you do your, so you can see what I'm saying. See the what? See the accumulation. If you are not even clear with the accumulation, you can still switch your chart to what? To line chart. You will see it clearly. See the see it. I see. So it's just what? That's the CR, that's how you use your CRT. It works on any pair. It works on any pair. But so you have your what? Your CRT. So your entry will be after you have the what? The change in market structure. Now, so let's go down to the deep down on this. So we have the what? A break in market structure here. This candle break it here, and then you have this low here. This is your break in market structure, right? This is your break in market structure. So you can enter right from here, return back to other blocks. So on 1-minute time frame or 3-minute time frame, you can see the structure clearly, right? You can see the structure clearly. All right, so you can see the structure clearly like this. So your stop profit will be there. So you target the what? The low of the what? The CRT, which is here. So meanwhile, if you are here to subscribe to my YouTube channel, please do here to hit on the subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new comment. And if you actually find value in this, please hit on the what? The thumb up and give me a like button. I would definitely appreciate it. And then please do where to what? To subscribe to my channel and share for other traders to what? To benefit. And if you see any other thing you want me to talk about, please kindly let me know. Drop it in the comment section. I will definitely respond to it. So this is Volatility 25. You can try it on currency pair 2. The same thing applies to currency pair 2. The same thing applies to currency pair 2. Let me just use my, so you have that. I hope it shows here. Oh, sorry. So you have that. So it's applicable. Okay. So it's applicable there. So it's just there for you to just work with it, and then you find values in it. Take your time to practice. Until the next time we'll see, stay profitable. You need to be profitable. Trading is easy, just for you to what? To be committed and what? And stay profitable. Thank you very much. See you next time. So guys, about a week ago now, I posted a video on CRT, how you can trade the 1 hour candle. So this is me using it in what? In live action. You can see is a what? Is a is a what? Is a funded is a live account. So This is me using it in what in live, as you can see what I'm saying. So that's what I use in what in flipping my account 5.3. So as a recap on what on the criteria for the CRT, as a recap for it. Now the CRT, now remember I told you the CRT is just for you measuring what. If you can see very well, you have my what my Fibonacci here, whereby what I measure the range of the what the previous 1 hour candle. That's what I'm trading. If I go on 1 hour now, you see that that's what I'm trading. So that's what my previous 1 hour CRT candle. So the strategy simple says that we just wait for what I will drop the link on the what for the strategy in the description of the video, so you can watch it and see. So it just says that we just need to what we need to wait for what for a turtle soup, right? We need to wait for a what for a turtle soup. So that's what the strategy is all about. And then the turtle soup, and it has to be in our what in our key zone. It has to be in our key zone. So it has to be in our key zone. So those are just the first things. Once you wait for your turtle soup, and then you wait for the turtle soup, right? So that's just the strategy. So you can see this is my turtle soup here. This is my turtle soup. So that's my what my manipulation to this what to this other block here, right? So this is the low of the previous 1 hour candle, and this is the high of the previous 1 hour candle. So as we open the current 1 hour candle, which is 8 o'clock candle, they manipulate to the upside, giving us making this one my what my manipulation. So this blue line is my what is my midnight open price. And so since I have that confirmation that we are above the what the midnight open price, so that was why I pick up that entry. Right, so that was why I pick up that entry. You can see, so that's how I used the what the CRT candle to trade the what the 1 hour candle, right? So to trade the what the 1 hour candle. Right, so this is 889. So we are at the peak of the what the range already. Right, so we are at the peak of the range already. So that's how we use what the 1 hour. So you can see below my what my TP here. I have this what this fair value gap here. I have this fair value gap, and this I have this other block and fair value gap. So that's the what that's the range of my CRT. So this is the low of my 1 hour candle, and this is the high of it. So that's me using the CRT in what me using the CRT in action. Me using the CRT in action. So if there's anything you want me to talk about, if you are here to subscribe to my YouTube channel, please do well to hit on the subscribe button and turn on the bell notification, so that you stay updated each time I'm dropping a new content. Right? You stay updated each time I'm dropping a new content. So see you guys. So that's the CRT in action. So we've gotten the manipulation. This is the manipulation on what on 1 minute time frame. See, this is the close of the what the other one here. So we have this manipulation to the upside. So this is my midnight open price. Remember that I told you that London session is starting between 2 a.m. to what to 5 a.m. That's 2 a.m. in my time is what 2 plus 5, that's 7. This is 8 o'clock already. We are in 8 o'clock, 8:40 currently now. So this is my what my London session. So I'm expecting them to drag the price down to the midnight open price before we can now start buying. Right. So this is the manipulation. This is the manipulation of now this current sell now is manipulation to the what? To the manipulation for our 4 hours CRT candle of our 4 hours power of 3. Get it right. How do you know that is manipulation for our what? For our 4 hours CRT candle, right? By the time we go on what? On 1 hour time frame or 4 hours time frame, now you will see that we look at the 4 hours candle that we are, right? Look at the 4 hours candle that we are.
So that's the look at the so I'll show you the 4 hours candle that we have. So if you are here to just subscribe to my YouTube channel, please do well to hit subscribe button. I'll be doing more of this now. I'll be doing more of this as I'm going to be showing you the full in-depth of how you can use this CRT of a thing. It's very, very powerful and effective. Honestly, it's very, very powerful and effective. Just follow the word, follow the rules. Just follow the rules. So this is my TP. Yeah, I'm waiting for my TP to be hit. So guys, if there's anything you want to talk about, please comment on the comment section and please do well to hit on the subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. Until the next time that will come your way, be safe. So until the next time that will be coming in your way, be safe and let's enjoy the moment while it lasts. So, so this is how far we've gone. You can see I'm at $15, $16 already. I'm at $16 already. I'm at $16 already. So that's how I flipped my own account, and that's what I does basically. That's what I does basically to flipped account. I'm not hiding anything to you. I'm not hiding anything. It's just the normal rules I've told you. The normal simple rules I've told you that will work with. That's what I'm doing. I'm not hiding anything. I'm not hiding anything. It's just the normal thing that I said that we do. So see until the next time that will come in your way. Be safe and keep watch. Be safe and see you.
Well, guys, welcome back to my channel. So today I've decided to do a very deep dive into the power of three, or the CRT candle and power of three. After my first video on how to predict the next candle and how you can trade the daily range candle within 30 minutes, I've gotten a lot of feedbacks from people that they really need to understand this, how to use these two concepts, and using these two concepts warrant back to your what, to your CRT pattern. The easiest way you can use these two concepts is you mastering your what, your CRT pattern. So today I've decided to what, to drop a video on how you can what, you can trade the what, the CRT pattern, right? How you can trade the CRT pattern, right? So the video is not going to be a long one, but not going to be a long one, and it's going to be the shortest of all, where I'm going to touch everything you need to know about the CRT pattern. So if you want to know about the CRT pattern and how effective it is, then you need to watch this video to the end. And toward the end of the videos, in the videos, I'm going to be dropping some hidden gems, the key concepts you need to implement to have a what, a successful CRT pattern, and how you can master the CRT pattern. Because once you master a single candlestick, you can retire earlier from your 9 to 5 job. So without wasting much of our time, if you are here to subscribe to this YouTube channel, please do well to hit on the subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. And please do well to share this channel to your friends. Let benefit. Remember, trading should be what, should be fun. So when we talk about CRT pattern in this video, this is what you're going to learn. We're talking about the CRT pattern, the candle range theory, which we know as the CRT pattern, the power of three, how you can use the CRT pattern and the power of three together to have an effective trading setup and a very profitable one without risking much. Then I'm going to talk about how smart money uses the power of three to trap retail traders. It's not about you just knowing the power of three or knowing your CRT. You need to understand the what, the other side of the game, which is the what, the market maker, how they use these things to favor themselves and what, to unfavor the retail trader with the retail trader. So once you get to know their move, that's what we call that. You need to know the pros and the cons of what, of the setup you are trading. You need to know the pros and the cons of it. So I'm going to be telling you how to predict the smart money move before they what, they happen using your CRT pattern. And I'm going to talk about extensively on the what the candle range theory patterns that we have and how you can use them. I'm going to talk about the time frame breakdown for CRT pattern. One thing with CRT pattern is that your CRT pattern cannot just stand alone. You need to implement your time frames. And that's why I keep telling you, if you are on my on my channel, or you are in my on my inner circle. I've always said that the only thing you need to know in this market is what is your time and price. If there's anything you want to learn time and price. Because when you learn time and price, the two must align, and that is one thing CRT pattern did that makes it a very profitable one. Very, very profitable, honestly speaking. You've got to see the result I'll be posting on my channel and on my status. That is just the power of what? The power of CRT pattern. Then I'm going to talk about the key times for high profitable CRT setups. We'll talk about the practical example of trading high probability CRT pattern. So if you want to learn, if this matches with your what? Your motives, your objectives, then you need to watch this video. Grab a book and your pen and your notepad and make sure you follow along the line. Every seconds of the video counts. Every seconds of the video counts. So every seconds of the video counts. So when we talk about candle range pattern is just a three-bar candlestick pattern. We can call it a three-bar candlestick pattern. Some will call it a swing high. It is still the same thing, but it's not about knowing the name. You need to understand the psychology behind this pattern. It is not just an ordinary pattern. Let me put it that way. It is not ordinary pattern. So when we talk about candle pattern, candle theory is built on a simple yet profound idea. Every candlestick on a chart reflects a range of price actions. This candle represents the broader market movement. This is what you need to understand. This is what you need to understand. Every candlestick you are seeing on your chart represents a range. So the moment you understand, and that's one thing with CRT pattern, you are trading a range, but you are not just trading an ordinary range, you are trading a range that matters. So that's one thing about the candlestick, the candle range theory. That's your candle range theory. So that's one thing with your candle range theory, right? So here is what you need to know. Every candlestick has a high and a low. Take note of it. I've talked about it extensively that what every candlestick, as a matter of fact, there are four key things you need to know about a candlestick. Once you know these four things and you know the pros and cons of the four things, I'll keep telling you the pros and cons of it, because normally it is what all of us know, but majority of us does not know the pros and the cons of it, and that is why this thing have been eating us hard in the market. So you need to know the pros and cons of what every candlestick. Remember, every candlestick is the range, and once every candlestick, there are things very common. Every candlestick has an high and a low. So as you zoom into a lower time frame, this range becomes a clearer and forms the basic of what? Of your CRT pattern. Remember, if you are taking this CRT pattern, it has to come from a higher time frame. And once you have it on a higher time frame, at a key level, remember what? Know that what? At a key level, not just forming at what? At a higher time frame. It has to form at a key level, and at a key time. Know the two. It has to form at a key level and at a key time. So once you implement these two things, automatically your setup is going to be a numerous one, a profitable one. What you need to know. So this is your what? This is your CRT pattern. Every candlestick has a what? Has a high and a low, irrespective of whether it's a bullish candlestick or a what? Or a bearish candlestick. It has a high and a low, and that is what you need to what? To know when you are coming into the market. Right. So the power of three, we have the manipulation, the distribution, the accumulation. Right. We have the power of three. It is what? Manipulation, distribution, and accumulation. So one thing you need to understand. Now let me go back to the what? The candle that I gave you, the CRT pattern. So as a matter of fact, remember we have the power of three. I said is what? AMD. AMD. This is your accumulation, this is your manipulation, and this is your what? Your distribution. We all know power of three, but we don't know how to represent. We don't know the psychology behind it. I'm going to be doing a deep dive on CRT pattern and your power of three. The moment you understand your CRT pattern, I can tell you that you can retire your 9 to 5 job earlier. You just need one CRT candle and you can master just one CRT candle and you can retire your what from your 9 to 5 jobs. From your 9 to 5 job. So that's one thing. If you have anything you want me to talk about in the video, please drop in the comment sections and I will definitely respond to it. So let's move on. So we have the power of three. The power of three is just your what? It's just a psychology that tells you what you have three faces of what of every candlestick. Every candlestick has its own power of three, irrespective of the time frame. A 1 minute time frame, a 1 minute candle has its own power of three, and you can trade it. A 5 minute candle has its own power of three and you can trade it. You just need to understand the what the psychology behind it, know your accumulation, know your manipulation, and you trade your distribution, you will be profitable. A 15 minute candle still have its own power of three. So these are the things you need to what you need to know. Right, so that's your power of three. Then a practical example of it is this. Now, this is the accumulation. If you want to talk about the accumulation phase is just the what? The phase whereby you have a market. The market is in what? We call it consolidation. It's just going up and down, trying to what? They are building contracts. They are building contracts, trying to what? To trap retail traders. There is not going to be a unique range just moving from what? From an up and down. This is what we call an accumulation. You can see they are not breaking the high, they are not breaking the low. So you at this particular time, you know that you need to be patient, wait for the market to move from accumulation. And once they move from accumulation, the next thing they will do is they will go down to your what? To your manipulation. And this is where you start seeing things. This is where you start seeing things. After the accumulation comes the manipulation, like I told you. After the accumulation comes the manipulation. So the manipulation phase, this is the critical part of it. The manipulation phase is just the market moving in a wrong direction. If let's say if you are bullish, let's say you are bullish, this is going to be accumulation. After this accumulation, the next thing market maker will do is that they will give you a what? A what? A sell. They what? They will give you a sell. The sell now is to what? Remember that they've trapped a lot of traders. They have a lot of stop loss here, a lot of stop loss here, a lot of stop loss here. So the next thing they will do is that what? You can see this is what we call an equal low. This is showing there's what? There's liquidity here. So the first liquidity the market maker need to grab in the accumulation phase is what? Is the manipulation phase liquidity. So once they go, if they want to buy, they need to sell first. So once they sell down. They are not just selling, they are pushing the price down, selling to a key level on higher time frame. Put it in what? Quote this thing, they are selling to a what? To an higher time frame key level. An higher time frame what? Key level. So it's not about you just saying, okay, they want to sell, probably they have a what? An order block here. What? An higher time frame order block or an higher time frame swing low here. Rejected low. So they'll set the market here. This is your manipulation. After the manipulation, you can see a sharp move. They will never stay long in manipulation state. They will never stay long. Within 1 minute, 2 minutes, they've done the damage they want to do. And what? Instantly you start seeing price pushing up. So this is example of it. Look at it there. After this one, this is our manipulation. You can see they are not breaking, they are not breaking. What they did, they sell and took out the what? The liquidity here. Look at your manipulation here. This is your manipulation, right? You can see that after they did this, they closed back inside the range. The next thing they will your entry is going to be after this other block here. Once they close above it, this is your what? This is your manipulation. And after the manipulation phase, we have the what? The distribution phase. Your distribution phase is the phase you want to be trading. This is the phase you need to capitalize on and trade. This is the phase you need to capitalize on and trade. So your distribution phase is just whereby you start seeing sharp moves, very sharp moves. They don't waste time. As a matter of fact, the damage they've done here, they might stay here for like 2, 3, 4, 5 hours. 15 minutes, 20 minutes, they can stay in accumulation, but within 5 minutes, you see the distribution. You yourself know that no, the market makers are in the market already. Because once they are there, you will see them. If they are not there, it is going to be very crystal clear that they are not in the market. So you want to capitalize on distribution phase. And this is the phase you need to master how to what? How to what? How to set it and how you can what? You can capitalize on it. So moving on. So we have the what? How smart money uses the three market phases to trap the what? The retreat traders. That's just what I've actually explained. That what? We have three phases in the market, which is going to be your what? Your accumulation, manipulation, and distribution. So the accumulation phase, they use this in what? In trapping, in grabbing orders. Is going to be consolidation. There's one thing many people don't understand about this consolidation. Your consolidation can be Your consolidation can be in two forms. Your consolidation can be in what? Can be in two forms. If you want me to talk about the hidden gems in your accumulation, then drop in the comment section the hidden gems in accumulation. I'm going to be talk Many people when we talk about accumulation, many people will just be looking towards to swing high, swing low, swing up and down. Accumulation is more than this. Accumulation is more than this. So if you want me to talk about in my next video, the hidden gem in how you can spot your accumulation range, and once you can spot your accumulation range, automatically your manipulation will not be a problem. The problem people have with power of three is that they can't identify the accumulation. They don't even know where the accumulation is. So first of all, how did they want to know that okay, we are in accumulation phase, then we are moving towards the manipulation phase? So if you want me to talk about the power of three extensively, then drop in the comment section power of three, and I'm going to be to respond to it. So moving on, so that's how the market maker uses the power of three. So we have the accumulation, the manipulation, and the distribution. So this is these are the three phases of the market maker. Right? These are the three phases of just like what I've said earlier. So we have the accumulation, we have the accumulation. So we have the accumulation phases. They just trap the traps order, then we have so this is a candlestick representation of the power of three. So this is where we start talking about our CRT pattern. This is where we start talking about our CRT pattern. So the CRT pattern now, we have the so we have the accumulation phase. We have the accumulation phase. So the accumulation phase is going to be the first thing you will see in your CRT pattern. It's going to be the first thing you are going to see in your CRT pattern. Your accumulation range is the first thing. So after the accumulation, and that is what we take as as our CRT. So it's the one you are going to be marking the high and the low. So the high of it is your CRT high. The low of it is your CRT what? Your CRT low. So this is the range you are marking. This is the range you are marking. So once you have the accumulation, you can see this is the accumulation. Many will be like, this is a distribution, the volume here is more. This is what you don't understand. When it comes to CRT pattern, you need to understand this is the accumulation. Then after the accumulation comes the what? Your manipulation. Your manipulation is always going to be your second candle, your CRT pattern. Remember, your CRT pattern is what? It's a 3-bar pattern, a 3 candlestick pattern. So your second candle will always be your manipulation. And once you have this, now let me tell you the hidden gem is this. So you have this one. This is the bearish candle. Expectedly, you expect the next candle that will form after this candle should be bearish too and should close below it. Remember my first video on how you can predict the candlestick, the daily time frame. Remember that when you have a candlestick that close back inside the range of the previous candle, that is telling you that a reversal is about to happen. So at this particular time now, you need to what? This is your sale, this is your manipulation. Once you have this candle that close back inside this is telling you that you are having a reversal, that we are in an uptrend. So this is what the manipulation phase does for you. So this is what the manipulation phase does for you. So you need to understand the candlestick, not just knowing them. So you have the distribution phase. Look at it here now. This is distribution. You have the other one was in forms of what? A bullish market. Now this is going to be in forms of what? Of a bearish market. Remember, I told you your accumulation stage is the stage you are marking as your range. This is where many people get it wrong. They say no, no. Your accumulation phase is your range, and that's your dealing range. That is the range you are trading in. So you mark the high and the low of it. Look at it here. The first thing is this candle came here. They grabbed the liquidity here. There was liquidity here. They grabbed the liquidity and closed back inside the range. This is telling you what? A reversal is about to happen. You can see the next candle what happened there. They open and what? And take out the what? The low of the what? Of our range. This particular candle alone can, if you can learn how to spot it, master the way you spot it, is can master this particular candle alone can make sure you can make you retire from your 9 to 5 job without in a short period of time. You just need to what? To master the process. So this is your what? This is your so let me show you on the chart. So this is a practical example of it. So you have the what? You have your CRT candle. This is your high and this is your what? This is from higher time frame. This is from your what? From higher time frame. So this is your high, this is your low. This is your CRT, this red candle. This red candle is your CRT candle. This is the high, this is the low. Now remember I told you your CRT pattern has to form in a key level. Now the key level we have here is this our fair value gap here. This our fair value gap. This is the key level that we have. So you have this. So automatically you expect the next candle. So once you spot it, this is 1 hour time frame. You go down to a lower time frame. You need to see another a lower time frame CRT pattern on the lower time frame you are using. This is another place where people get it wrong. Once they see the lower, once they see the what, once they see the CRT candle on the higher time frame, they just go down to lower time frame and started trading. You can't trade it on that particular time frame. You need to go down to a lower time frame. And that is what is going to bring out when I'm going to be showing you how you can align the time frames together. Because you can't be trading a 1 hour time frame, 1 hour CRT candle on what? On a 4 hour candle or a 30-minute time frame. You are trading nonsense. It is nonsense you are trading, sorry. You can't be profitable. You just end up to be the liquidity. The liquidity you want to grab, you end up being the liquidity. You end up being the one supplying the liquidity for us to grab. It's very deep. Yes. So once you either be the liquidity or you grab the liquidity. So that is your what? That is your CRT. So you go down to your what? To a lower time frame. Once you are in a keyword, a key level. So I want to so if you are trading the 1 hour CRT pattern, you go down to your what? To your 15-minute time frame. That the lower time frame you'll be using is your 15-minute time frame, and you can see this is the high. So we expect the market to what? To form. Look at it, the same thing you have on your 1 hour time frame is what you have on your 15-minute time. Look at this candlestick. It rejected. So this alone is telling you that what? You are bearish. So once I get to enter, I'm going to explain how you can enter. But automatically, this is a bearish candle. So once you have a bullish candle that closes above it, your entry is going to be the open one of this bullish candle, bearish candle. Your stop loss is going to be below, and you can target the what? The 50% of the CRT range, or you target the what? The high of it, right? You target the high of it. But sometimes you need to just focus on this. Look at this. This is your what? Internal liquidity. They took out external liquidity here. So this is your what? Your internal liquidity. Remember, market move from what? Internal to external, external to internal. So that is the what? That is what you need to understand in the market. So you have the what? You have the 15-minute time frame, and you can see what we have here. So it's trading what? You have this. This is your CRT pattern, and you what? This your entry is going to be here, just like I've explained. The entry is going to be here. You have a confirmation since this candle closes above this what? This last bearish candle. So it's telling you that what you move from what? From a bearish market to a bullish market. So your entry is going to be the what? The open of the next candle. And you can see how we do it. Remember I told you, you can see it. So you have this what? This is an internal liquidity. So you not just target the what? The high. Once you have a what? Something to support your take profit. So that's your CRT pattern. So moving on, we're going to the CRT patterns and type. So we have three CRT patterns. We have the standard three candle CRT pattern. We have the standard CRT pattern, it's just a 3 bar pattern. Then we have the inside bar pattern. So the inside pattern is not going to be a 3 candles. It can be 4, it can be 5. It depends. It depends. So this is the what this is the so moving on, we're going to the time frame and breakdown for CRT pattern. Like I told you, you can't just trade the CRT blindly. You need to align it with time frames. CRT is just
is a particular strategy that works with time and price. So if you are not getting your time right or you are not getting your price right, automatically you are trading nonsense. You are trading, and once you are trading nonsense, you can't be profitable. That's just the simple truth. So here is what the time frame breakdown for the CRT pattern. So when you spot a CRT pattern on higher time frame, you don't just stop there. I told you earlier, you zoom into a lower time frame to find your entry point and make sure your timing is spot on. Your timing is spot on at a particular time. Mark this, take note of this. So if you are working with the daily time frame, if you are trading the daily, if you want to trade the daily CRT, then you need to watch. The lower time frame you're working with is going to be your hourly chart. If you are trading the 4 hour time frame, your time frame the lower time frame you're going to work with is going to be your 30 minutes. Many people make mistake on this and say, no, 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 you need to go down to 1 hour time frame, you go down to 15 minute time frame. No, you are trading nonsense. You work with what? Your 30-minute time frame. Based on what I've practicalized from my back testing, I've seen that the 30-minute time frame tends to work more with 4 hours time frame rather than the 15-minute time frame. So if you are working with hourly time frame or you are using the 1 hour CRT pattern, then you need to be using the what? The 15-minute pattern. This is what we call divided by four. They divided by 4 rules. That is a time frame you are using. The higher time frame you are using must be times 4. The lower time frame of the times 4 of the lower time frame is what will give the higher time frame, right? Times 4 of it. 15 times 4 will give you 1 hour. So 15-minute candle, you use your what? Your 1 minute time frame. So this is going to be for a what? For a swing trader. This is going to be for a what? For an intraday trader. This is going to be for a scalper or an intraday trader too. And can be for what? Basically a scalper. So I wouldn't advise this if you have not really mastered and done for what. This is for professionals. This is for what? For professionals. So that is your time frame alignment. So moving from there, from our time frame, we go down to what? To our time, right? So this is the example of it. So this is a 4 hours CRT pattern. So this is your 4 hour CRT pattern. This is your what? This is your CRT high and this is your CRT low. So moving on, all this here, this is going to be a what? A CRT pattern. So you have the what? So we have the what? The key time frames now. So we have the what? The key time frame. So key time for high probability CRT. Important note, you need to understand that timing is just crucial as spotting the setup itself. Timing is very, very important. The same way the setup is important. Not all CRT are created equally. You need to know this. It is not all CRT that are created equally. No. One of the biggest factors that separate a winning trade from a losing one is when you catch it at the right time. This is very, very crucial. So for forex traders, you have the timing. So we have the forex traders and we have the future traders. So for the forex trader, you need to be working with your what? You have the 1 a.m. CRT pattern, we have the 5 a.m. CRT pattern, we have the 9 a.m. CRT pattern, we have the 1 p.m. CRT pattern, and we have the 5 p.m. CRT pattern, and we have the 9 p.m. CRT pattern. So for future traders, it's going to be 2 a.m., 6 a.m., 10 a.m., 2 p.m., and 6 p.m. and 10 p.m. So the only difference there is that what? The future traders, so these are what? The future traders are your NASDAQ, S&Ps, your indices. These are the future traders. But for forex, your normal gold, your GBP, your USD, your boom and crash, your volatility 75. These are the time frames that work with them, right? So this UTC is always going to be your Eastern Standard Time. So you need to what? You need to convert it to your what? Your Eastern Standard Time. Convert the Eastern Standard Time to your local time. This is where you know what exactly what I use. So many people have problem in converting these things. So if you want me to create an extensive video on how you can convert this time frame to your local time, drop in the comment section. Convert 1 a.m. Eastern Time to my local time. I'm going to watch and let me know the area. Let me know the let me know where you're chatting from or where you are commenting, where you are watching from. Right. So just type in 1 a.m. in London, 1 a.m. in Egypt, 1 a.m. in Dubai. Just let me know the location you are working with. I'm going to convert it for you. Right. So this is coming to an end. This is what you need to know about the CRT pattern. So
I Let me show you one practical example of it. Let me show you one practical example of it. Right. So, like I was saying, this is a practical example of it, the CRT pattern. This is my 9 a.m. CRT. My what? This is my 1 a.m. CRT pattern, right? This is my 1 a.m. CRT pattern here, right? So you can see this is my trade history here. This is my what? This is my entry here. This is 5 minute time frame. This is my CRT. They took out this eye. My target entry was here, but this is a what? A 1 hour what? CRT pattern. So that was why I went and closed my entry here. My closing point was here and around this, right? So you can see it is clearly can see they took out this what? They are coming to this higher. Let me show you the key level here from 15-minute time frame. Let me show you your key level here. So if you want to know more about this CRT pattern, please kindly what? Hit on the subscribe button and turn on the bell notification. Please do well to share this video, recommend it to your friends. Let them benefit from it too. So this is okay, let me show you. Okay, so you have the what? The 1 hour time frame here. You can see this is the CRT pattern. You can see we have this, right? We have this, they close above it, and that was why my entry was here. This is my what? My key time frame. Return back to an order block here. On 4 hours time frame, I have my order block here. I actually did a video on this particular one, so you'll get it in the link. I'm going to drop in the live video of this live trade on the video description of this, and at the end of the video. So you can do it to watch on that video to understand it and see the way I do it live. So meanwhile, if you really appreciate this video and it's of benefit to you, please hit on that like button and please do well to share with your friends to let them benefit. So remember that this is an hidden gem. This is something I will charge hundreds of dollars for just to teach you. I'm taking my time to teach you for free. So please do well to appreciate my effort if it's actually beneficial to you by hitting on the subscribe button, like it, comment, and what I share with your friend. Until the next time I'm going to be coming into your way, please remain profitable.